Let me now invite Deven Choksey. Deven represents Choksey Securities. It's a very renowned and one of the oldest firm of Bombay Stock Exchange. Over the years, they've identified stocks which have given you returns of 1,000%, 1,500%, even 2,000%. Now, before I thank Deven for joining us, we also should thank his wife, because I had to actually convince his wife to allow Deven to travel to Kolkata. And Deven has agreed to convince his wife on two conditions: that when he will be going back from Kolkata, he will be carrying Rasgulla and Sandesh. So somebody privately will have to tell him from where to buy, because his flight is at 5 o'clock. Deven, may I invite you to now come on the stage? And the louder you clap, the more tips you'll get. It's on you, Kolkata, now. You want free tips? Okay, Deven secretly winked at me and said that with this clap you'll only get one tip. So you have to clap more for him.
Well, good afternoon, friends, ladies and gentlemen. The dignitaries sitting on the dais, and all of you have basically, I think, taken time today to be here. And as Mr. Mitra rightly said, over a long weekend, I think you came up with such a large numbers. So it is our endeavor also would be to give you some amount of ideas as to how you go about investing into the markets. Subjects have already been opened up. Mr. Mitra has already started talking about the macro numbers, and various asset classes have been also talked about. How they are performing, that is also been seen out here. My job would be to take you through how the equity as an asset class is expected to perform in coming 3 to 4 years. Why 3 to 4 years? Because as he rightly put across in his slide, in the first year, equity is not producing enough amount of return. After 3 years, it starts producing return, and after 5 years, it never loses money. Nikunj talked about few numbers on the performance side of our recommendations. I'll allow my subject to, I think, communicate that part of it to you. 4 cycles starting from 1984 to 1992 of 8 years, 1992 to 2000 another 8 years, 2000 to 2008 further 8 years, and 2008 to 2016. What is going to be in 2008 to 2016? That's something which we'll be talking about. But more importantly, in each of this period of 8-year cycle, you would probably find that an average return of around more than 30% has been given in out of 3 cycles, 3 completed cycles. In 2 cycles, the market has given an average return of more than 30% in this particular period. So in each of these particular table, you find that the Sensex and the returns along with, in which I have also put across the CAGR return of 8 years. Except in the period of 1992 to 2000, you found, or you find here, that 1984 to 1992 and 2000 to 2008 period, market has given you a return of around 30% on an average basis. So if I have to start looking at the entire market movement, forget about past. I think let's start talking about the current cycle. 2008 we picked. 2000 December we made a bottom, and from 2012 January onwards we have started seeing rise in the market. Probably it has started matching the period here in this space. So if I have to put across one view here, quite possible, going by the earlier analysis, 2012 to 2014 period would be a good consolidation period for the market. In this particular period, you might probably see a good opportunity to buy into the market, because market will not be euphoric in this period. It's a phase which is consolidation phase, which probably give you a lot of opportunity in this particular 2 years. And quite possible that after 2014, in next 2 years, that is 2015 and 2016, you might see a euphoric rise that we have seen in earlier years. Somehow or other, I think some of the events in the country are also matching along with. In 2014 we have election, and after election generally it is seen that the market scales up. But I think we'll not talk more on that aspect as of now. But just want to drive a point to take you to the next slide, that this market, in all likelihood, going by the study of last 26 years, suggests that we might be entering into, or we may have already entered into, a phase of consolidation. I call it, it's a phase which is stock picker's delight. If you end up picking right kind of stocks in your portfolio, these 4 years probably can give you fantastic amount of return. Friends, I am not coming in from the timing side. Today, I have to put across this particular subject to you more because there is a general lack of confidence in the minds of people about equity. And people haven't been investing as much into the equity despite of all the rationals going in favor of equity for investment because of the valuation advantage that we have. Still people are not investing. And as rightly put across, I think in one of the slides by Mr. Mitra, in most of the time I think market and people want to catch momentum. When everybody starts investing, I think momentum starts building in. And that is where I think I want to say that if this momentum is expected to happen in subsequent years from now, then might as well start looking at equity for investment today. As I was making a point that last 4 years of cycle has been a bull run that one has seen. If you look at, I think 2000-2008 period, you probably find, I'm referring to the graph on 2000-2008, you probably find that 2003-4 period onwards till 2008, the way the market scaled up is a phenomenal amount of rise. In the first 2 years of this particular period of 2004 and 2005, the rise has been moderate. But 2006-2007, the rise has been phenomenal as far as the market is concerned. Same thing happened, but prior to that, between 2000 dot-com bubble which busted to 2004, market remained frustratingly flat. We have also seen this kind of a flat behavior of the market in this particular period of 2008 to 2012. So going by this particular study, it appears that if this 4-year period is over, then probably I think we should once again see an up move into the market. And believe me, I think the various data suggests that we have been getting phenomenal amount of return in this particular period. There is another typical behavior that we have studied and we have found out here, that from previous peak, market makes bottom in 14 months. December 2011 was 13th month. December 2011 was 13th month from October 2010. So if you actually start looking at this particular period, we may have made a bottom in the market. Again, this study is basically, the analysis is basically only taking us near to the confidence level of investing into the market. Stock picking and everything has to be carried out anyway. But generally it has been seen that after 14th months, when it starts rallying, in following 3 months, it would give 25% rate of return. Again, I am recalling this study was made in December 2011 and was presented to investors. I am using the slide from there itself. Probably in the first quarter, I am validated because of the kind of 25% return that we have talked about. In first quarter, we already reached somewhere around 22% kind of a return. So given this particular theory and analysis, if I have to project the index, generally I don't make such kind of projections because we are long-term investors. So we normally don't want to take 1 year for projection. We want to take little longer period of projections. But suppose if I have to take some effort in making the projection to what could be Sensex at the end of March 2013, that is 12 months from now, probably I find that the Sensex, if it ends up with 15% growth in earnings, Sensex stocks, if they end up making 15% growth in earnings in this financial year, and if we apply 18 times price earning multiple, which is an average of last 5 years, maybe given the uncertainty of the global market, I discount it by 20% and give a target multiple of only 14 times, very conservatively. the Sensex should touch somewhere around 20,300 levels. So, if you are a pure Sensex buyer, then probably I think you might get even a rate of return which is better than any other class of assets which can give it to you even today. So, my strong reading says that this is a strong possibility, and one will have to look at this possibility as we keep crossing every month, every quarter in the economy. This is the model portfolio of stocks for investment for this coming 1-2 years. And Nikunj, I have not put in one stock. There are 10 stocks. Well, I think what I have taken up, and probably I think I will not be able to explain each and every company at this point of time. But I want to basically tell you that the companies which we have picked up is largely influenced by our sectoral selection that I have talked about. The IDFC is more because of the infrastructure attached to it and current valuations supporting it. The capital goods segment and the infrastructure companies like Adani Port particularly is largely towards the infrastructure asset ownership and higher amount of return on capital employed that these port assets generate vis-a-vis power asset, road assets and airport assets. So we like Adani Port kind of a company. We also like Adani Enterprise kind of a company more because it is shaping up to be the largest coal producing company in the country in the power sector in next 10 years. With asset acquired in the Australian country and also in Indonesia that they have. And in India, they operate on lease basis some of the coal mines. So this company looks, I think, fairly interesting from investment point of view. Praj Industries and Jain Irrigation are typically, I think, out of your presentation, if I have to take up one of the slide in which you mention that larger amount of government's outlay has gone towards the agriculture. And larger amount of outlay is expected to go towards water and water related areas in this 10 years. Both these companies are basically getting into this particular bracket. Jain Irrigation is catering to the agricultural sector, and Praj Industry, with its recent diversification into water and water management business, is something which we have picked up. And generally my confidence is that in initial years, these companies, they give muted returns. But in subsequent years, when the implementation of programs start taking place, you would probably find higher amount of return coming from companies like Praj Industries and Jain Irrigation. Of course, in the banking space, we have also ended up picking up SBI and IndusInd Bank, which again, I think more on a valuation and a growth story respectively. So these are the few companies which we have added into our model portfolio. Before I conclude and say that we can probably interact more after my presentation, I want to just bring up this last slide to you. This last slide is a 25 years of study of all asset class. Indian equities have given an average 14.7% return on a CAGR basis in last 25 years. Corresponding to that, copper has given 7%, gold has given 6%, oil has given 7%, Dow Jones and FTSE have given 7% and 4%. Indian equities have outperformed other asset classes 9 times, whereas copper, which is the closest competitor for outperformance in these last 25 is only 5 times. To my mind, with commodity prices staying at the elevated level, at the peak level, and only likely possibility of they coming down, probably equities and Indian equities would have higher performance to talk about. Maybe this is the last concluding slide in which I wanted to reinforce this particular confidence that equity investment is not all that bad. What is required is buy and stay invested. Unfortunately, we buy and sell tomorrow. I'm attacking your format. But if you invest for a longer period of time, it's a fantastic case of making wealth out of this market. $1.3 trillion of market capitalization could easily surpass 2.5 trillion market capitalization in following 8 years. And that's where I think you have an opportunity. I'm sure I think you would like to grab one. Thank you for patiently listening. Thank you.